Hello everyone, hello loyal subscribers. How are you? How you doing? If you're here for the first time, welcome. My name is Denzel. Purpose of this channel is to teach personal finance to people so they may understand just how money works and how they can get out of debt, increase cash flow, lower expenses, and raise their credit score, all using their own income. Doesn't that sound great? Right? It's like pleasing, okay? It's really nice to be able to get there, and not just alone. You bring your family and your friends and the people that you love with you, right? So if you've been watching my content for a while, consistently, you know that I'm dropping content every single day. It's been a month now, and I gotta say, I feel like I've been growing every single day doing this, day in and day out, dedicated to this one specific thing. I've been getting really good feedback and a lot of support. So I just want to thank you for all my subscribers and for my family and my friends, people that love me. You're watching the process from 0 to 100, right? From 0 to success. Okay? You're really going to see the whole entire process, and I want to bring you with me along the way. Okay, and we're going to do this ethically, right? Good business, good customer service, right? And we're going to do this by increasing our having level and just giving a lot of value. So if you're someone that's been watching me for some time now, or you know me, and you're like, yeah, Denzel, this velocity banking is cool and whatnot, I enjoy it. It's good. I like, using the credit to pay my expenses and pay me back, and I earn rewards, and, I earn some money back, and, I save on interest costs and all those things. But, what if you're someone that doesn't have debt, right? You don't have any real debt. Your cash flow is good. Like, you're cash flowing like, 500, 1,000, 1,500, 2,000 and up per month, right? And you have a really good job. Okay, you're doing your thing. You've got your dream job or career, doing exactly what you want to do, exactly what you study for, right? And you're like, what's the next step, right? How do I level up in my personal finances, right? Because a lot of your content is always talking about how to get out of debt and how to increase credit score. What if I'm already there, right? Like, what if I'm already got a good credit score? I got no debt, my cash flow is up, my expenses are down, my income is pumping, right? Doing my thing. How do I level up? Okay, what's the next step for me? If I'm someone that, I'm laser focused on what I'm doing, so I really don't want to take the time to learn about another business opportunity or investment opportunity out there if I just don't know, right? Can you share something with me, right? So the way that I level up, right, after I've killed debt, after I've increased my cash flow and got to that point where it's like, what's next? Okay? The first thing that I want to do is I want to create a savings asset, right? I still don't want to invest yet, right? Because in my opinion, before I make any investment outside of myself, right, investing in me, I want to have at least 100,000 or more sitting in cash, right, accessible, that I can use to like invest in something that I may not know so well or may not be an expert in, so that I have room for error, I have room for loss. Okay? In when you're first starting out in investing or you're starting out in saving, right? You want to figure out what are the best tools. So stick around. I'm going to share with you some stuff that I think is very effective, just because I look at history. I also look at parents, mom and dad. I see what they did and I see the failures that happened to them, and I'm like, okay, don't want to do that. All right, I don't want to get me a CD. I don't want to get me a mutual fund. I don't want an IRA, a 401k, or any of those retirement accounts, because clearly you lose a ton of money at some point of funding this thing. It costs a lot of money just to run the account, management fees, right? Annual fees and broker fees and trading fees, right? I gotta pay a lot of taxes on the capital gains, so it's like, and I don't understand how tax works, and it's just like, whoa, too much. Let's look at a savings asset, right? It's familiar, okay? But how do we save money and grow the money and have access to it without incurring any penalties, right? Without getting knocked to use the money now, right? So the way I classify this savings asset, it has to have three things. It needs to be safe, right? When I mean safe, I mean protection, right? Protection from stock market crash, real estate crashes, recession, oppression, depression, whatever comes next in the next few years, right? Tech crash, whatever. Needs to be safe. Second, it needs to be liquid, meaning I can take from it at any time, I can use it at any time and not incur a penalty, like a tax penalty or like a withdrawal penalty or anything like that. And last but not least, it produces cash, meaning it earns interest, right? Not only does it earn interest, I want this thing to earn interest consistently every single year, no matter what happens, right? I can't lose money, right? Because if it's a savings asset, it's safe, it's protected, so my principal is protected, meaning I don't lose it, and it grows interest every single year, okay? So that is a savings asset for you, the components that it has in it. Now, what is the product? Well, I look at history again, right? I'm like, okay, in finances, what has never failed in terms of the concept, right? And if been watching my videos, you know how I feel about this, right? Insurance, banking, and real estate are the three things that have never failed. I'm talking about the concept itself has never failed, right? It's still, till this day, is being used all around us. For example, velocity banking, right? So that's a concept that will never fail. Banking, velocity, killing debt, leveraging debt, right? Real estate, everyone's got to live somewhere, right? So real estate will never, really be obsolete, because everyone needs a place to live. And insurance, right, protects everything around you. Car, auto, home, tornado, hurricane, health insurance, dental, vision. Right? Am I getting somewhere? Well, there's also life insurance, right? Most people are oblivious to this. Life insurance, having insurance on yourself, right? But how do I create a savings asset that's revolved around protection, liquidity, and produce cash safely, no matter what, every single year? Okay? When I looked at history and I did my homework, I came up with whole life insurance, right? I saw that back in the mid 1850s, 1860s, right, many businesses, entrepreneurs, right? Even some of our founding fathers, okay? Benjamin Franklin is one. That these men or women had whole life insurance, not only for protection, like in case they died, but they used it as a means of building wealth today, as a means of growing cash today. So inside of whole life, there's a way that your money can grow interest, right? Where I'm talking about interest is, it's called cash value, right? If you know where I'm going with this, cool, stick with me. I'll explain a little bit more. If you're like, what? Don't worry, I'm gonna break it down. Okay? So whole life insurance, right? It's just a life insurance product that protects you for your whole entire life. The way it works is money goes into two places, right? You've got premiums, which is the cost of the insurance, and you've got cash value, right? Which is money that earns interest, right? Produces cash. Not only does it earn interest, but it earns it tax-free. How? Very simple. The IRS started in 1913, along with the Federal Reserve. This product had already been around for over 50 years, right? And perfected and mastered. So what IRS did was they labeled insurance as an asset, right? Not as an investment. Because when you invest in something, you must pay tax on the profits, on the gains. But when you have an asset, right, like insurance, according to the IRS, they say, hey, this is an asset, right? It's primarily used for, death benefit claims, right? So we're not going to tax money on that insurance policy on that individual. Okay? We're gonna tax advantage this. We're gonna give this a tax advantage. Should any cash grow inside the policy, people can use it, right? They can borrow against it. They can use it tax-free, no issue, right? When the individual dies, when that lump sum gets paid to the family members, we will not tax that money at all. That's tax-free. Okay, so that's how that works. Okay. So with leveling up, right? My next move, my opinion, right? My thoughts on that is, get your savings asset in order. Simultaneously, you're doing what you want to do in life, right? You're a doctor, you're a lawyer, you're a mechanic, you're an engineer, you're in the military. Okay, you have a nice career in finance, or you're in the medical field, right? Whatever it is, kill it, crush it at that, right? You've got no debt, your credit's good, cash flows up, expenses are not exceeding your income, right? So that's why you have good cash flow. Instead of having that money sit in a savings account, not earning you any interest, right? We can move that cash flow, boom, into this savings asset where we can grow our money anywhere from 4 to 6% every single year, tax-free, no matter what. The money that I put in that goes into cash is liquid. I can use it. Something goes down, I get injured, I lose my job, right? I'm in transition. Maybe I'm going to move to a different state, right? Maybe I want to buy a home, buy a car, okay? It's liquid. It's safe because in the insurance industry, to give you a little, education on this, is insurance companies can only lend a portion of the money that they have. Unlike a bank, right? Bank of America, Chase, Wells Fargo, they do fractional reserve lending. So if you gave them $10 into your checking account, right? They're able to make 10 90, right? They're able to lend 9 times the amount of money that they actually have. This is why banks sometimes go under, right? But this is also a reason why big banks will never fail. So it's this double standard kind of, right? Whereas, in '08, we've seen a lot of banks go under, but then we also saw big banks not fail at all. Okay? Well, with insurance, it's flipped, right? If insurance company has $90, they can't make it 900. Okay, they can only lend a portion of what they have. And that is regulated by the IRS. Okay? So that goes to show protection around your money. Now, another layer of protection is figuring out which insurance company to actually go with, right? The way I figured that one out is there are 4 major insurance companies that offer this product, whole life, that earn cash value 4 to 6%, right? That's liquid and safe. Are Mass Mutual, Guardian, Northwestern, and New York Life. Okay, these are companies that have been around for over 100 years. Their balanced portfolios are incredibly high in terms of wealth. Their revenue are in the billions, right? So it's just like looking at a Bank of America, a Wells Fargo, a Chase, JP Morgan. These guys ain't going nowhere, right? So that's why, you would put your money, most people put their money with them, right? So those banks aren't failing. But if you were to put your money with a little local community bank, they could potentially get wiped out because they do that method of fractional reserve lending. Unlike insurance companies, they don't do that. Plus, they've been around longer, right, than not only banks, but they've also been longer. They've been around longer than the stock market itself. How cool is that? Right? So that's how I would level up. This was going to be a pretty much longer video than I expected, but it's important to really explain things, break it down for people to understand, because oftentimes we just get sold into things and we just believe blindly. So it's important for us to get the information, find someone we know, like, and trust, right? And find someone that really knows what they're talking about when we're looking at our personal finances, because it's personal, right? So, hope you enjoyed that. That is what I call leveling up in your personal finances. This video is for people that are not hurting financially, right? You've made some progress, right? You've got out of debt. Your cash flow is nice, right? Your income is set. Expenses are not exceeding your income, right? You're smart with your money. This is what I would recommend next as a savings asset, because, listen, you don't have to become an expert in it, number one. Number two, it's like a savings account. So there's no, do I buy this stock today, or, the stock market's down, or do I flip this property or not? Like, Listen, you're a doctor, you're a lawyer, you're a mechanic, you're an engineer. That's your thing, right? So for you to try to split yourself, right? This is where people get messed up in their personal finances. They think they can just invest money in something and expect, someone like me or a financial advisor or, their neighbor next door to make money for them, right? And that's just not how that really works. You're helping them make quite a bit of money, right? So it's nice to really know your personal finances, right? And after we've acquired a savings asset, right? Then, once we have 100,000 sitting in cash, right? Then we can probably look at something like a nice property to flip, right? Or we make those connections. It might happen before or after, but at least you have that cushion. Like, I have 100 grand sitting right here. Like, nobody can touch me. Doing my job, making my money, and making my bread, taking care of my family, doing what I gotta do, right? You're not getting sold, right? You've got your fantasy league in order, right? You know exactly what you're doing, why you do it, and who you do it for, right? So yeah, hope you appreciate that. I'll have a link in the description if you want to get more information on how do I create my own savings asset, man. I like the video, but let's talk a little more one-on-one. Let's figure this out together. Let's see where you're at. So I'll have a form for you to fill out, and that's a way to get in touch with me, and we can talk one-on-one and build this thing, right? I want to help people create wealth and leave a legacy for our family.